Let's bring in Pence Capital Management CIO Dryden Pence. And Dryden, let's break down your expectations. She was just talking about technology, and you would imagine there might be a little bit of a retrenchment in the mega cap sevens.
Well, you're in this environment where they've run so much so far and everybody's jumping into it. But it's also, this is about that moment where we've been building out the infrastructure of AI. We've yet to move to the implementation. It's like you're laying the tracks for the transcontinental railroad, right? You've got the infrastructure going on, and that's continuing to happen. So we think the Mag 7 is going to continue to do well. But I think what's really going to happen is you're going to see this broadening out of earnings across the rest of the S&P 500 and the 493. So I think that it's very important to recognize that we're going to have this bumpiness. It's kind of a frazzled cat syndrome. Anytime you get a strange piece of news, everybody's going to panic a little bit. We see a little of that happening today. But I think what really goes on here is the fundamentals of the long-term build-out of the infrastructure of AI is going to continue to go with data centers and hyper-growth and those kind of areas. But as we look at earnings growth across the rest of the S&P 500, that's where you're going to kind of see the continued strength as we move into 2025.
Too, also, I'll be curious to see how regular brick-and-mortar companies and traditional companies, if their investments in AI begin to pay off in their earnings in 2025. And I have a feeling it will, but that's just my guess. But let me point back to something that you mentioned in your note. You say when it comes to that 2025 U.S. equity outlook, you mentioned that Goldman expects the premium gap could be as small as 7 percentage points as earning growth cools. So Goldman is saying that there might be a little bit of a cool-off in the market.
A cool-off in the earnings of the Mag 7. And,
okay.
And I think that's the point. You see a cool-off of the earnings of the Mag 7, but you have the rest of the market kind of, rolling. You had an earnings recession going on, right? So rolling recessions turn into rolling recoveries. And so when you look at the market as a whole, you're going to see the rest of the technology companies outside the Mag 7, and those companies, as you very well pointed out, it's not just those who are affiliated with AI, but it's what I call AI plus H, AI plus the human factor. How much labor productivity do we get out from companies that are adopting AI? We've really yet to see that happen, but the companies that make use of that are going to see a continued earnings growth. And that looks like about 11 or 12% next year, and that's going to help propel.
We have a guest coming up that's going to be talking about the evolution of AI. It's going to be very interesting to see the next piece and what that means. Really quick, you like some picks: NVIDIA, Taiwan Semiconductor, and ASML. Is that kind of tied back to that same story, or is that a different?
Exactly. We try to look for what we call choke points in the supply chain of satisfaction, places where a company's really dominant. So NVIDIA is the choke point for AI, and they're like 90% of the chips. Well, then you have companies like TSMC. They are about 30 to 40% of NVIDIA's capital structure. Of all the spending that they do is to TSMC, which we think is the most valuable, most important company in the world. And then you have ASML, which makes the extreme ultralight, violent light, machines that make all those things happen. So you have NVIDIA's at 90%. You've got TSMC is about 38% of NVIDIA, and then you've got ASML, which is about 48% of TSMC. So you have these companies in the choke point of the supply chain of making all this happen that are all absolutely essential to AI moving forward.
By the way, one quick thing in your note I thought was interesting. GDP in the fourth quarter is indicated at 3.2%, but you say the Fed's forecast of 2.1 GDP growth for 2025 is likely low. So you are seeing a growth story for the economy, which is a bullish argument. It would be good considering that we are going to have a change in Washington. So
absolutely. I think people are underestimating the fact that, we still have a lot of money from COVID still working through. We added more money during COVID in 1 year than we did all 4 years of World War II. So that continues to have a multiplier effect through the economy. The economy's stronger, I think, than most people realize. And we're going to have that 2.1 is likely low, and we think that it's going to be stronger across the board.
All right. Well, Dryden, thank you so much for coming in.
Absolutely.
All right,
Thanks for having me.
Happy New Year. Well,